Hello, everyone. Good morning. This is Kathy. If you can hear me, let me know. Good morning to all of you on our YouTube live stream, as well as all of our BK members. Welcome to Kathy's Caffeinated Market Buzz. I'm so delighted to have all of you today because it is going to be a very, very busy trading week, and there's a lot to talk about. There's a lot to talk about, and yeah, I think it's going to be a very, very insightful conversation that we're going to have today. So just give me 1 second to make sure everything is working properly, because I actually don't have everything the way I want it to be. So just give me a second. And once again, like I said, hello everyone, welcome to Kathy's Caffeinated Market Buzz. And we will get started in just a second. And let me just make sure my audio is good, make sure my screen is good, make sure I'm sharing what I want to be sharing. Yes, okay, hello everyone. So like I said, this is a very, very important, busy trading week in the markets. Last week was a bit more of a lull, but I think, this week we're gonna have a lot more going on that will not only, possibly trigger some interesting moves in the market, but also, give us some new direction to possibly trade off of in the coming weeks. So there's a lot that's front and center. The main focus is going to be on these 5 specific things, which I will break down in more detail as we discuss. So the number one event risk is going to be the non-farm payrolls report. And, that's because everyone is going to be watching how the jobs number fares. And even though number 2, we have the semi-annual testimony by Fed Chairman Powell this week, nothing new is really expected to be revealed by Fed Chairman Powell. And I'll talk about it more later. But the NFP report, you can't fudge, well, Chinese can do it, but you can't really fudge data and the market's interpretation of it, or try to be vague on the outcome of a report as important as non-farm payrolls. So that's why I think that it's going to be more important than the semi-annual testimony. But of course, at the semi-annual testimony of the economy, Fed Chairman Powell could very well provide some sort of interesting guidance. And if that happens, that could create very big moves in the market. And that is on Wednesday. Then we also have China. China has their has two important meetings this week, including the National Party Congress meeting. And they are expected to, first off, provide their growth and deficit targets for the year, which, everyone wants to know, is 5% going to be the number they're targeting? Is China going to be looking for 5% growth, or are they going to be looking for less? On top of that, they could possibly deliver more substantial stimulus for the economy. And that is also something that the market is watching very closely. So the Chinese meeting is very, very important this week for risk appetite in general, along with for what this could mean for the Australian, New Zealand dollars and other currencies. Now, we also have the European Central Bank monetary policy meeting. No changes are expected from the ECB, but the European Central Bank could lower their growth and inflation targets. And if they lower their growth inflation targets, that would basically suggest that they're one step closer to lowering interest rates. So that's also a very big event. And then we have the UK spring budget. So with the UK spring budget, there's a possibility of a tax cut from the UK. So we've got Jay Powell, Fed Chairman Powell's semi-annual testimony on the economy. We have non-farm payrolls. We have the European Central Bank meeting. We have China's National Party Congress meeting, where we're getting the growth targets and any stimulus. And then we have the spring budget. And then on top of all that, we have other things like the Bank of Canada monetary policy announcement. We have what I like to call the leading indicators for non-farm payrolls, like ISM, the ADP report, along with Challenger Gray and Kiss Christmas. All of these events are important. And we also have Australian GDP numbers. So like I said, there's a lot going on for pretty much every single currency this week. And that is why, you should buckle up for a roller coaster ride in the markets, especially since stocks are hovering near their highs. Dollar yen is hovering near their highs. And so something is expected that could potentially give. And that's what, I'll be watching. That's what, I think the market will be really tuning into, not only for this week's price action, but also for the price action that could follow in the coming weeks. So this is a huge week for the markets. Now you're looking at my heat map, and there's a lot of neutral settings. And the reason why there's a lot of neutral views is because there's so much event risk. In terms of the dollar, we already talked about how the two main event risks for the dollar is going to be Fed Chairman Powell's semi-annual testimony on the economy on Wednesday and Thursday. And typically Thursday is a repeat of Wednesday, and the prepared statements are usually released quite quickly, but the market likes to listen to hear whether there's anything interesting revealed in the questioning by Congress. So sometimes the Fed chair likes to use the semi-annual testimony on the economy to telegraph any major changes in their guidance. Now, Fed fund futures are pricing in a interest rate cut in July. So the expectations have been pushed from March to July. And a couple of weeks ago, we had talked about how the market's completely misaligned in what they expect about what the central bank could deliver on interest rate cuts. Now they're much more aligned. The dot plot from the Fed suggested that the first interest rate cut could happen this summer. Now the market's adjusted itself to agreeing that the first interest rate cut from the Federal Reserve could happen in the summer. So that is part of the reason why, what was not priced in before is now beginning to be, correctly priced in. And I worry that non-farm payrolls should be weaker, and we're starting to see softness in the ISM manufacturing data, for example, and there's a possibility we could get weakness in the ISM services. So we're starting to see softer U.S. data, and that could trigger a more sustained pullback, a more significant pullback in the U.S. dollar. I believe the dollar is near a near-term peak, and that there is a greater opportunity of a decline than a rally in the near term. But of course, we'll have to see. If those non-farm payrolls numbers are blowout, then the outlook shifts again. I'm also neutral euros, but I'm actually neutral bearish euros. What's interesting is that last week's European Eurozone inflation report was expected to be very weak, but it was not. The inflation report ended up being stronger than expected from the Eurozone, even though German data was quite weak. So that makes the ECB's meeting this week a little trickier because the ECB, no one expects them to change interest rates, but the ECB could lower their inflation and growth forecast. The growth forecast, almost certain they're going to lower it. And I think they're going to lower the inflation forecast too. And that would put the ECB one step closer to lowering interest rates. And that could end up causing a sell-off in the euro. So that's something I'm going to be watching quite closely for. Now, in terms of the British pound, we don't have much in the way of actual UK data this week, but as I mentioned earlier, we have the UK spring budget, which could lead to a tax cut announcement. If we get a tax cut announcement, that could lead to a rally in the British pound, as it suggests that they could get some stimulus. So I'm bearish now, but we'll see, because data hasn't been great and UK economy definitely is still going down, but that could change. The Australian dollar, I'm bullish Australian dollars. I'm also I'm bullish Australian dollars because first off, we have the two big meetings from China this week, and from China, the National Party Congress meeting is very, very important. And the reason why, and the next meeting is the China's People's Political Consultative Conference. And these two sessions begin tomorrow. And they're expected to announce their growth and budget deficit target this year, which we know is going to happen. So if the growth target is below 5%, it's going to be bad news. Sell off for the Australian dollar, sell off for the New Zealand dollar. If it's still above 5% or even greater than 5%, that's going to be good for the Australian dollar, New Zealand dollar. And then there's also scope for the potential for fiscal stimulus. And if we get fiscal stimulus, that could also be good for the currency. So keep an eye out for that. But we also have Australian GDP numbers that are released along with Australian trade data. Canada with the Bank of Canada rate decision. BOC is also not expected to change interest rates. But once again, guidance is key. And the central bank could, suggest that they're getting closer to lowering interest rates. And if that's the case, that could lead to sell-off in the Canadian dollar, which would be more consistent with, some of the movements we've seen in oil. The New Zealand dollar, I'm neutral. And the reason for that is because we had the Reserve Bank of New Zealand meeting last week. And the RBNZ basically said that, inflation outlook is more balanced, which is less hawkish. And these less hawkish comments could put the central bank as basically, led to a very significant sell-off in the New Zealand dollar. So that could also keep pressure on Kiwi this week. I'm bullish the Swiss franc. I'm neutral the Japanese yen. I'm bullish the Swiss franc because I think there's going to be a correction in stocks that could lead to a sell-off in some of the higher currencies and lead to some flight to quality in the Swiss franc. The yen is trickier. I also think the yen should rally, but the CPI, we have inflation data from Japan tonight from Tokyo, and if that comes in a little weaker, like the national numbers, that would be really bearish for the yen. And the problem for that is that it could also lead to the reinforcement of what BOJ Governor Ueda has been telling us, which is that, they're still really far away from reaching their inflation target. So the yen has a lot of fundamental factors pushing against it lower right now, but it won't take much to turn it around. Just one weaker inflation report, one cautionary comment from Ueda, we are close. And, sell-off in stocks could lead to rally in the Japanese yen. So I'm neutral bullish Japanese yen. Taking a look at the calendar, last night we had New Zealand trade data, which was very weak. And part of the reason why I'm neutral bearish Kiwis and how the Reserve Bank, their dovishness is being reinforced by the data. We also had Australian inflation data, which was softer, Australian building permits data, which was softer as well. But China's meeting tonight will be the most important for Australia and New Zealand this week. And then today we had inflation data from Switzerland, which was stronger. Also another reason why I'm bullish Swiss francs. Today, nothing going on from the US. Tonight is when we start to get the National Party Congress meeting. And I talked already about how important that is. We had Chinese PMI data last week. They were slightly firmer than expected. And then we have more Caixin data tonight, which is important, but I think it's going to be less important than the 2 meetings that we have in China this week. And then as the week progresses, we have on Tuesday revisions of Eurozone PMIs, which are not market moving. They're hard to forecast, but if we get big changes, of course, they could be interesting. We also have the PMI data from the UK revision. So once again, if changes are made, they could be market moving. And then we have US PMI numbers. Once again, these are not that important. The most important will be ISM services. And the reason why ISM services is so important is because this is a leading indicator for non-farm payrolls. Because non-farm payrolls basically represents service sector job activity for the most part. And the manufacturing PMI number was very weak. So market's looking for a drop there. Keep an eye on the employment report. This is going to be very, very important release tomorrow. And I think very, very market moving. And then we have Australian GDP numbers. With Australia GDP numbers, the market's looking for stronger GDP growth. I'd be a little cautious because retail sales did weaken. So we may not get as much strength as we hope for. But, that is definitely something that I am watching. And then on Wednesday, we have Euro area retail sales numbers, German trade data. This all will take a back seat to the UK spring budget, ADP, and Fed Chairman Powell's testimony. So we could get consolidation in the markets before we get Fed Chairman Powell's semi-annual testimony on the economy. Now, the Bank of Canada rate decision comes first. We already talked about how no changes are expected, but keep an eye on the guidance. UK spring budget, keep an eye on the possibility of tax cuts for the UK. ADP, the market's looking for a jump in ADP. If it's softer, it would be reinforce what is expected for Friday, which is a weaker non-farm payrolls report. And as for Fed Chairman Powell, his guidance on what could transpire on growth and inflation, and also what is expected for the inflation outlook will all be very, very important and very market moving. So Wednesdays can be a very market moving day, in my opinion, for the dollar, for stocks, for gold, for everything. And then Wednesday night, we've got Australian and Chinese trade data, which will be interesting, but Chinese trade data will be more important. But once again, this is a big week for China, where we have 2 very important meetings with the growth and deficit targets announced, along with the possibility of fiscal stimulus. That's going to overshadow everything else. And then on Thursday, we have the ECB rate decision. Before that, we've got factory orders, which is interesting, and it could be very much weaker. Also Swiss unemployment rate, but ECB is the main focus. And the ECB could lower their growth and inflation forecast, which would be an issue for euro and weigh on the euro if that happens. Canada trade data, not a huge market mover. Same story with US trade data. Press conference from the ECB will be important. Day 2 of Fed Chairman Powell's testimony is always less market moving than day 1 because the prepared statement is released. All the important questions that the market wants to ask is usually asked already, so they tend to be far less market moving. And then we have on Friday we have Euro area GDP revisions. That's going to take a back seat to Canada and US jobs reports. Canada is expected to report weaker job growth. US is expected to report weaker job growth. We'll be looking for opportunities to trade this reactively, particularly in CAD yen. So BK traders definitely tune in. We'll be trading this with you guys and watching for any interesting outcome off of that. And then those are the major event risks. So if you're tuning in late, the 5 most important event risks for this week is going to be number 1, non-farm payrolls. Number 2, Fed Chairman Powell's semi-annual testimony on the economy and monetary policy. Number 3, China's National Party Congress meeting, where they're going to give us their growth and deficit targets for the year. Number 4, it's going to be the ECB meeting. Number 5, the UK spring budget. So now let's take a look at the charts to see how things shape up on a technical basis. For Euro's been trapped in a very tight range, obviously itching for a breakout. And as you can see, we've got kind of a roughly drawn, kind of triangle that's forming in Eurodollar. Itching for a breakout, triangle levels and narrowing. On the top side, if we get above 108.80, I think we're going to see more significant gains to the upside. On the downside, we need to break below 108, which is not far from current levels, for a deeper move to the downside. And those levels are very important. Sterling also, in a very, very tight range. If we get a interest rate cut, that could be positive for a tax cut. That could be positive for sterling. If we don't get a tax cut, that could be negative. But as you can see, it looks like a lot of things are shaping up for an upside break. But I think we'll get a consolidation before that. And that upside break would be hinged upon dovishness from Fed Chairman Powell on Wednesday, followed by a weak non-farm payrolls report. And you can see in dollar yen, this 150.85 level in dollar yen is still holding as resistance. And that's going to be the level to watch. I think it could hold. If we break to the upside, then, it's going to run up to 152, which is the November highs, and then maybe target the next round number. But I think, we could find some real struggle around that level. Dollar Swiss, on the other hand, is already above all of the major moving averages. It looks like it wants to rally in the near term, but we've had some weak, stronger Swiss data. Right now, I think the path of least resistance does look to the upside in dollar Swiss. Aussie dollar is under pressure. Levels to watch is going to be 65.50 for a stronger move to the upside, and then this low here at 64.85 for a stronger move to the downside. And I do think, while I think Australian GDP numbers could be weaker, I do think that the Chinese, and it actually it's a tougher call, because if China's growth target comes in below 5%, then we could see a sell-off in the Australian dollar. So it actually could go either way. So I wouldn't say that it's really a bottom here in Aussie. And then Kiwi, with Kiwi, we're bearish, neutral bearish Kiwis, and it's under pressure. This 200 SMA at 60.70 is really holding as support, and I think it could continue to hold, but be careful, because that could give as well if we have a deeper sell-off in stocks, and stock futures are definitely pointing lower. And then dollar CAD, oil prices are flat right now. We do have dollar CAD hovering near its highs. I am bearish CAD data this week. I also think the BOC is going to be more dovish, so I do think that CAD could sell off. And and depending upon what happens with U.S. developments, there could be some interesting opportunities in dollar CAD. And gold is obviously broken out to the top side. I know Boris will shed his thoughts on gold, but lots of you are joining us on the YouTube live stream and our BK members. So please remember to subscribe to our channel, particularly since I have lots of interesting news updates. So please make sure you subscribe so you don't miss, any of these outlooks and our next Caffeinated Market Buzz. Otherwise, I'd like to open up the floor, any questions you may have or charts that you may want to look at together. So I have some comments here. ISM is a leading indicator for NFP. The employment component of service sector ISM is a very nice leading indicator for non-farm payrolls. And then Rich says it'll be very hard due to much spending by Tories to get a material tax cut. Promises a big tax cut in the future is another matter. And yes, you're right. They could underdeliver. I would not be surprised if the UK government underdelivers, and that will be very, very important for sterling. Can you take a look at the gold chart and share your insight? I mean, clearly, very strong breakout in gold.
I'll talk about it. Let me
yes,
talk.
Boris will talk about it. BOE, no rate cut soon, should help pound, which against a relatively dovish euro. Yes, I think euro pound to the downside has opportunity, because we have euro is bearish this week. We've got nothing going on for the UK. This looks like it's consolidation with a possibility to the downside on that outlook. So definitely something that is interesting to watch. Also, any of you that are watching this stream that's interested in futures prop trading, our friends at Apex have a very good offer that expires at 4:59 p.m. today to save 80% on all of their futures prop trading accounts. So make sure you take advantage of that if you're interested. Also, if you want to learn more about fundamentals, there's some links that will include in the description for my fundamental course. So definitely, all of you are interested in fundamentals, and I really appreciate that because you understand the importance of that. All right, so if there are no further questions, I'll let Boris share his outlook on gold and the equity market, which is beginning to roll over.
Yep. Hi, guys. Good morning. Good morning. Let me share my screen. So, if you just caught my tweet over here, I said, don't look now, but gold is making another run at 2100. That is really the big story of the hour right now. If you're looking at our gold chart, if you're looking especially at our, big charts over here, it's actually running off the chart. I can't even bring it into the thing. We had a nice hit in gold already, made $600 on the trade early in the morning using our big indicator, which takes an early sort of pre-New York market signal. In this case, the signal happened at around 6 o'clock. I actually took it a little bit later. I basically sort of came in manually around 7 o'clock. And it was just a incredibly fast, hard move to the upside. More importantly, if you look at gold at a kind of a larger, maybe even, 8-hour scale, let me just get back over here. What you see is that we're approaching, again, that very, very important 2100 level. Remember, the last time we came in there, it was a Asia section spike out. And then, then it unwound everything all the way down to right underneath 2000. And we've spent essentially the month of December, the month of January, the month of February, consolidating within the $2,000 and $2,100 range, which is actually very, very bullish. The fact that they could not let it come down below the 2000 level is a super, super bullish signal. And if we are, gold has broken more hearts than, I don't know, whoever is the movie star that breaks, most hearts. But gold has definitely broken a lot of hearts in terms of fake pop-outs, fake breakouts. However, if we do clear here, more importantly, the most important thing we just need to do is we don't have to really make super fresh highs. We can just hold the 2100 level for this whole week. Literally, we take out 2100 and hold it for the rest of the week. That will be a very, very bullish signal and suggest that the next level that we have in gold may be 2500. It's a signal of the fact that I think we might start to see an easing of the U.S. interest rate regime. Everybody's expecting a hot NFP number. It may actually surprise to the downside, which would just give ample fodder for the Fed to begin easing rates. And everything else seems to be very, very positive. There's just, with gold, you really have to just simply look at price action. It's too hard to try to figure out what the fundamental driver for this thing will be, since there are so many different inputs that come into this trade. But the one critical input here is, by the way, the other thing that's sort of very, very bullish against this is rates are up and gold is up, right? So the fact that this buying is against a headwind of higher rates is even a more bullish signal that that the buyers have just decided to really ramp this up. As I said, ultimately, gold may be a trade on U.S. sovereign debt proxy, sovereign debt confidence, and as you get this kind of a double whammy of slowdown in the economy and interest rates remaining relatively high, the sovereign debt issue becomes a much bigger warning issue, and more people start using gold as a proxy for an insurance hedge. So whatever the reasons are, it's hard to figure them out. What we do know is that technically we have very strong breakout. We've been just literally uniformly bullish gold. In other words, our only positions in gold have been either flat or long, and that's exactly how we trade on an everyday basis. If you want to join me every single day, we trade gold live every single day, and we trade the U.S. indices every single day. And speaking of the U.S. indices, we are approaching some very, very key high levels. I think the sort of conventional wisdom is that we're really, really overdone, we're really, really overbought. where are we overbought? My friend Anthony Cordell is actually arguing that we don't really get peak until we get to about 450 level. This is a level maybe about 100 points higher in NASDAQ, where a lot of optionality expires, and you get sort of maximum pain for everybody who's short the market. So it's feasible. I think, do we have another 100 points in the market? Possibly, before we kind of top out. Certainly a very, very bullish chart, not a chart you want to be short until you get some inkling that there is some weakness in the trade. So to me, it still continues to be buy to dip until we try to get to about 18,450. US 30 is a little bit weaker on the chart. It's emblematic of the fact that the focus is still on high technology in the space, and you see that US 30 actually being the weaker of the two, maybe an early short for those of you if you want to take a punt on getting short US indices. Is probably going to be the US 30. That'll be the easiest one to short here on a relative basis. But that's pretty much how it sets up. We have a big week of data, as Kathy was saying. We have services, we have Powell testifying, and of course we have the non-farm payrolls, and we have a highly overbought condition, very strong overbought condition in all the equity indices. So although the market is tilted positive, it does feel like it's the final days of the rally here in equities before we get some corrective motion. But by far the most interesting story of the day, and one that we need to keep an eye on all the time, is what's gold doing. Gold is really making that move towards 2100. It's a super bullish breakout, and watch that level as the week progresses. So that's it, guys. I'm going to see you in 15 minutes on live. Everybody have a wonderful day. Those of you who want to join us, links are in the comments, or just simply email me and I'll set you up with a deep discount to my live trading room. I'll see you guys in a little bit. Take care.